The lithium boom has made some investors rich, but now things are getting tricky. Prices collapsed over 70% in the last 2 years, and a supply crunch could hit as early as next year. Now, if you're trying to figure out where real opportunities still exist, this video right here has got you covered. We're diving into 3 lithium stocks that bring something very different to the table, and one of them could dominate the next wave. Also, one of these picks might just be the smartest high-risk move that you haven't even heard about yet. So over the past few years, lithium demand has absolutely skyrocketed, mostly because electric vehicle sales keep hitting new records. In fact, global lithium demand is expected to jump by more than 50% between 2023 and 2025, topping out at 1.4 million metric tons this year. But here's a twist to that. So after a huge surge in production, prices dropped over 70% from their 2023 highs, and now the market's starting to really balance out.
That 70% price drop? It's not just a blip. It's a correction after years of over-exuberant investment in production.
Exactly. And, that correction needed to happen, Tiara. But from here, experts, they think that we could see a supply shortage as early as 2026, which could send prices and lithium stocks much higher. But not every company is set to win. So let's go ahead and break down our first pick and see what makes it stand out. So the first stock is SQM. I'm not even going to try to pronounce it, but it's shown on the screen here.
Sociedad Química y Minera.
It is a Chilean company that's become a global heavyweight in the lithium world. They control one of the lowest cost lithium operations on the planet, which means that they can keep making money even when prices take a hit. And that's a big deal when you consider how unpredictable the lithium market has proven to be. But here's what really sets SQM apart, right? They're not just a one-trick pony. Besides lithium, they also produce specialty fertilizers and iodine, so they have multiple ways to bring in revenue. And on top of that, SQM boasts a strong dividend yield, currently at about 6.4%, which means investors get paid just for holding the stock. It's a rare combo, right? You have stability, growth potential, and income all in one package. By the way, if finding potential gems like SQM early before it raises in value excites you, make sure to subscribe as I do my best to spot some forward-thinking investments every single week. But there are still 2 more lithium stocks that bring something totally different to the table. And one of them, which I mentioned in the intro, is all about high risk, high reward. So let's dig into that here next. So the next one is Sigma Lithium. And although this company doesn't have a decades-long track record of some of the industry giants, it does have serious momentum and a knack for really turning challenges into opportunity.
But where is it collected from?
So Sigma is based in Brazil, right in the heart of a region that's packed with high-quality lithium resources. What really makes it stand out, though, is that their lithium is some of the purest that you'll find on Earth, which means that battery makers are willing to pay a premium for it. In addition, even when the market gets rocky and prices dropped, Sigma managed to keep its operations lean, showing off some of the lowest production costs in the entire industry. But here's the part that gets most investors excited. So Sigma's production numbers have been climbing, and they've proven that they can keep growing even when times are tough. And that's not just luck, right? It's smart management and a focus on efficiency. If the lithium market really does bounce back like experts are predicting it will, Sigma could be in a perfect spot to benefit. But of course, there's one more player to consider, one with a totally different story, but just as much potential. So let's get into the details of Albemarle, I think is how you pronounce it, and see how this industry leader is making its own comeback. Now, if you've ever wondered what happens when a giant stumbles and then just gets up swinging, Albemarle is the perfect example. This company is the heavyweight champ of lithium, and even after taking some hits in the market, it's showing serious signs of a comeback. So Albemarle is based in the US and is actually the largest lithium producer in the world. That scale gives them a major edge, and they've got the resources, the relationships, and the know-how to keep pushing forward, even when the market gets tough. What's really interesting, though, is how they've handled the recent lithium downturn. So instead of just, tightening their belts, they've launched a major cost-cutting program aiming to save up to $400 million a year. And they have their eye on the future of American-made batteries. So with all the buzz about, building more EVs and batteries right here in the USA, Albemarle is in a prime spot to benefit from new government policies and the push for domestic supply chains. So if you're looking for a lithium stock with staying power, a proven track record, and a plan to really bounce back even stronger, they are the one that you really want to keep on your radar. So now that you know these stocks, you've seen the lithium side of the story. But what about the companies that actually use all that lithium? Well, Tesla's future is more tied to these trends than most companies, and some AI models are making what I'd consider practically insane predictions. So for instance, click on this video here to find out why AI thinks that Tesla could surge over 500% in the future. See you over there.